Chapter 11, Statement of Cash Flows. In this video, we're going to discuss how to prepare the investing activities section of the Statement of Cash Flows. This is the second step in preparing the Statement of Cash Flows. Investing activities. In the investing activities section of the Statement of Cash Flows, companies list separately cash inflows and cash outflows from transactions such as buying and selling property, plant, and equipment, making and collecting on loans, and buying and selling investments in other companies. We can find a firm's investing activities by analyzing changes in long-term asset accounts from the balance sheet, as well as investments. So increase or decrease in investments in other companies and long-term assets. So in looking at our example, we were told there was an increase in an investment. The balance sheet shows an increase of an investment of $35,000 during the year. In the additional information item, we're given information regarding this increase. We're told that eGames purchased investments of $35,000 in cash. This is an investment in another company. So we report the purchase of the investment as a cash outflow from investing activities. Think about it. If we invest in another company, we're paying cash out. So we need to record that as a cash outflow, as a negative amount. The second change that we see is a decrease in the land account. The land account decreased $10,000 during the year. It only sold for $6,000, resulting in that loss of $4,000 that we already adjusted for. We need to report the actual cash proceeds of $6,000 as a cash inflow from investing. Remember, land is a long-term asset, so we need to record the sale of the long-term asset as a $6,000 cash inflow. We received the $6,000 in cash. Lastly, we're told that there is an increase in equipment. eGames equipment account increased by $20,000 during the year. In our notes section, we're told the firm paid for the equipment by issuing a $20,000 note payable to the seller. No cash was exchanged in the transaction. The increase in the equipment represents a non-cash activity, which is disclosed either directly after the cash flow statement or in a note to the financial statements. We do not record it in the investing activities section because we do not actually have any cash inflows or outflows. The way this note would look would have note, non-cash activities, purchased equipment by issuing a note payable, and list the $20,000. So when we look at our two actual cash flows from investing activities, we have negative net cash flows from investing activities of $29,000. These parentheses are important because this will tell us later on if it was a cash inflow, net cash inflow, or a net cash outflow. So make sure that you're keeping these parentheses correct.